Ladies and gentlemen, welcome to BSV TV. I'm your host Satoshi, and on this show we'll be defending the one and only, truly genuine Bitcoin. The Bitcoin that Satoshi Nakamoto designed in his white paper as a peer-to-peer electronic cash system for the world. Let's get the disclaimers out of the way. So all the statements that you hear on this show are opinion and must only ever be taken as opinion. They are never to be taken as any form of advice, family, financial, sexual or otherwise. And on that note, let's sit back, relax, have some fun and enjoy the show. Get paid for your content in Bitcoin and set your own fee on Streamanity.
Yeah, I'm not surprised I wasn't asked why I'm convinced Craig is Satoshi. I posted on Reddit. He signed in my presence using the private key from block number one, the very first mined Bitcoin block. On a computer that I'm convinced had not been tampered with, on software I'm convinced that had not been tampered with, a message of my choosing.
At Enchain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte because it validates what we've already done independently. We've tested up to 380 gigabyte blocks. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts. Basically ones that can run operating systems. That's all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades. That means high frequency trading. It means everything that happens globally.
Is the market that effectively BSV is going for, is that global e-commerce, which is currently valued at $29 trillion?
No, that's too small.
Buy and sell Bitcoin instantly at bsvgravity.com. And you can now book and pay for your winter holiday at skibsv.com. Alrighty people, good afternoon. It looks like we are live. The time is just after 5:30. It is Sunday the 25th of July 2021. Welcome to Satoshi TV, aka Bitcoin is VTV, aka It's Just Bitcoin. So let's get in with some of these articles that I want to read through today, because I do love this. This is literally breaking new boundaries as we go along. This has never happened before, ever in history. So this is all new to us. Check this out. This one caught my attention for obvious reasons. EU to ban anonymous digital currency transfers. Well, would you believe it? Let's get into this then. So Gavin Lucas. It's old folk wisdom that you can't escape the long arm of the law forever. In the case of BTC and other digital currencies, it seems that the very long arm of the European Union is about to wrap itself around them and squeeze. On July 20th, European Union policymakers proposed that all companies that transfer BTC and other crypto assets must collect details of the senders and recipients in an effort to crack down on crimes like money laundering, the transfer of illegal gains and tax evasion. The EU is notorious for having some of the toughest anti-money laundering and know your customer laws in the world. With a GDP of $15.1 trillion, a population of over 447 million people, and plans to launch a digital euro in the not too distant future, the EU certainly has the clout to set the standard for how other large nations and political blocs behave in the future. And what's kind of ironic is that the European Central Bank has never once been audited. Neither the European Central Bank nor the Federal Reserve. Nobody knows how much money they print. But the fact is, they can print a lot and they don't want anybody doing what they're doing. And it's basically the law of the jungle. They will stop it. Only they are the ones who are allowed to commit crime and break the law. Nobody else. It's like, do what we do. Or do as we say, not what we do. It's ridiculous really, but that's the situation we're in with fiat currency, where people just simply have to believe that the currency they print has got more value than the currency that somebody else prints. It's absolutely insane. So what exactly is the EU proposing? The European Commission proposed that this amendment proposed this amendment. It will apply the existing travel rule to digital currencies transactions. This already applies to wire transfers in the EU and will make digital currency transactions traceable. Leaving no doubt about its intentions, the Commission said today's amendments will ensure full traceability of crypto asset transfers such as Bitcoin and will allow for prevention and detection of their possible use for money laundering or terrorism financing. It will require companies involved in the transfer of crypto assets to collect the following information: name, address, date of birth, account number, and name of the recipient. Providing anonymous digital currency wallets will be prohibited, as is already the case with anonymous bank accounts in the European Union. It's obvious that this will be the first in a long series of death blows to the anarchist fantasy of uncensorable anonymous money that can be used to commit crimes with impunity. Bitcoin's inventor, Dr. Craig Wright, has long been yelling from the rooftops about this, but it has largely fallen on deaf ears outside of the BSV enterprise blockchain community. What do these regulations mean? Are they enforceable? This is the end of the digital currency industry in the EU? Definitely not. The Commission emphasised that it wishes to find the right balance between complying with international standards, note the word international in case you believe this will only happen in the EU, and not overburden the industry with regulations. It stated that its intentions were to help the EU crypto asset industry develop. Well, again, the only genuine digital commodity is Bitcoin, which is BSV. So that's where it's all leading to, and they don't even know it. It's quite funny, really. Despite the protestations from some about what this means for BTC as uncensorable anonymous money, the new regulations are both inevitable and likely a good thing. It's just reality that large businesses like banks have to comply with KYC, AML laws, and as with many of the EU's other industries, giving participants legal certainty and stamping out crime will help attract capital investment and should lead to faster innovation and development. However, is the new rule enforceable? True to form, many crypto-anarchists believe not. They're going to learn the hard way. Some took to social media to claim the EU would have to ban maths to enforce the new rules. Oh dear, somebody needs to learn a lesson the hard way. Believing that the large companies and exchanges in the wider industry share their ideals, the initial reaction to this news even saw some claim that the EU's new steps were oppressive and totalitarian in nature. Who's this one? EU aims to further encroach on your rights and liberty in an effort to control your life even more. Yeah, says Ben Kaufman with laser eyes. Promoting a completely centrally controlled cryptocurrency that's absolutely fundamentally worthless. Dear, oh dear. I mean, he thinks he's free. He has no idea that somebody else has got complete control of his money. And he hasn't even realised that his money doesn't work yet because he's been told to hodl. What an absolute buffoon. Despite their dismay, it's simply a fact that exchanges, large software developers, and miners / nodes within the EU have to comply with these laws or risk being locked out of the one world's largest markets. Since they are legally registered entities, they will be easy to find and shut down or block from operating in the EU if they don't adapt and comply. It's unlikely any of them will willingly lock themselves out of the EU industry to make a political point. Lots happening in the European Union recently. Yes, indeed. This news comes on the back of several other major developments in Europe recently. Most notably, the ECB's Christine Lagarde announced the Digital Euro project. Details of its accompanying digital wallet, which may involve everything from money to digital identity and slower dripping out. Could we see a scenario where the EU's approved digital wallet, which most European citizens will eventually adopt, will be unable to interact with unknown wallets and exchanges which don't comply with these new regulations? It's highly likely that the EU would use such leverage to force compliance with AML and KYC regulations. Just use Bitcoin. Digital currency is growing up. Don't get left behind. As Binance's recent reaction to regulatory pressure demonstrates, it's easy to talk a big game about anarchic ideas like decentralization, anonymity and flouting regulations, but when the law comes knocking, rational actors like large companies will at least attempt to comply. The BSV Enterprise blockchain has been designed from the outset to comply with the existing regulations. Smart developers should choose to build on the only scalable proof-of-work blockchain that has made a point to work within the law from day one. Absolutely. So there's a post here from Jimmy Wynn saying Financial Action Task Force travel rule requires digital currency intermediaries to send ID information for each transaction over $1,000. Read Sentby and Angus Brown, thoughts and work by the Bitcoin Association's BSV Technical Standards Committee on standardized format for compliance. Yeah, very good, very good. The European Union's crackdown is only the opening volley in a global effort to tame and regulate the virtual currency space. Expect similar action from the US, China, India, and other nations in the future. Digital currency is growing up and it's about time. BSV Enterprise blockchain is and always has been ready for these developments. Are you? Indeed. What a great article that was. Yeah, do approve of that. Very good. Extremely well written. Let's see if there are any other funny ones. The Ethereum researcher Virgil Griffin ordered back to jail. What an absolute fool. That was for going over to North Korea and teaching them about blockchain and Ethereum. What a fool. Like, as if he thought he was going to get away with that. So blockchain attacks and reorgs, experiences from the past. Let's have a look at this one then. Our man John Southurst, BSV Train. Here we go. The recent reorg attacks attempts on the BSV blockchain continue to have consequences, with several exchanges starting to unfreeze deposits and withdrawals over the last several days. Despite the disruption and confusion as to what actually happened, it's important to note that blockchain reorganizations have been a fairly common occurrence in blockchain history. While it's not necessary for most people to understand the full technical details of how such attacks on blockchain networks happen, it's important to understand why they happen and how they're resolved. Wherever a malicious actor sees an exploitable opportunity, they will take it. So the important factor is how quickly developers and nodes can identify and respond to any attempt. To read more details on the mid-2021 BSV attack, read the Bitcoin Association's frequently asked questions here. Chain reorgs more often occur naturally as a result of network latency, and reorganizing the blockchain as a built-in feature. The blockchain is a built-in feature of Bitcoin and similar protocols designed to keep everyone on the right track. When hosts nodes restore order to the blockchain, reorgs pass unnoticed by the public. The routine and naturally occurring reorgs usually nullify or orphan just one or two invalid blocks. Put very simply, a reorg attack is a deliberate attempt to rewire history by creating an alternative legitimate chain of transactions, i.e. chain with the most proof of work. It's usually done by mining an alternative chain in secret, then broadcasting the results once that chain is longer than the legitimate one. If the motive is profit, the alternative chain would contain double spend attempts of some kind. Even if an attack of this kind is detected and rectified by honest miners, it can cause havoc and disruption. Even if an attacker can create a longer chain, it isn't necessarily the legitimate one. There's more explanation of what constitutes honest nodes and why the mythical 51% attack isn't real in this article. Good. 51% attack is just absolute crap. It's just fear-mongering. So why perform a reorg attack? Reorg attacks require money and electricity energy to perform, and these days there are more checks and remedies to protect against them, such as early detection mechanisms and alerts from nodes and exchanges. So the motive for launching a reorg attack may not always be a quick profit, but deliberate disruption to inconvenience exchanges and their users, who necessarily must endure long waits or outright suspensions on deposits and withdrawals, and to damage a blockchain's network reputation by making it appear unreliable or a security risk. Making it difficult to trade on a coin may also drop its unit price in fiat, causing further pain for speculators. However, there is a lesser effect, and if the attacker's motive is profit, it's not in their best interest to cause the market price to fall too much. Research on past attacks on Bitcoin Gold, Litecoin Cash, Expanse and Vertcoin showed that only VTC's price dropped significantly, with most others recovering soon after. Given the general public's low understanding of how blockchain works, reorg and double spend attacks, even if successful, can leave a lasting impression in the form of media headlines and forever pop up in Google searches or further news article references. Thanks to the past Wild West nature of the digital asset industry and behaviour of some of its participants, it's already seen as a risky endeavour. A simple headline about a hack or an attempted attack can have a lasting effect on people's minds regardless of the specific details. Notable attacks and reorgs on other blockchain networks. Bitcoin Gold is perhaps the least well known of the Bitcoin network splits that still dare to call themselves Bitcoin. It separated from the main BTC chain in October 2017 with the promise of bringing back GPU mining. Its relatively small following and node network and BTG unit price that has never fallen below $5 is currently $36, making it an appealing target for reorg attacks. Other notable reorg attacks on the Bitcoin Gold network occurred in May 2018 and in January 2020. The former saw exchanges lose about $17.5 million given the high value of BTG at the time. The second attempt to reverse deposits to exchanges of 1,900 BTG and 5,267 BTG. So that was back in January 26th, 2020. In July 2020, Bitcoin Gold managed to thwart a 1,300 block reorg attack attempt in which a malicious miner rented hash power from NiceHash for 10 whole days. Unbeknownst to the attacker, however, BTG developers had detected the attempt early on and secretly released a software update to its honest nodes with a checkpoint at the last known good block. Where the attacker tried to reorg the 1,300 block chain, nodes ignored them and continued to mine the honest chain, wasting a lot of the attacker's time and money. Good. That's quite a funny story. On January 21st, 2021, someone actually succeeded at performing a double spend on the BTC network. The now famous double spend was worth only $21 and was likely more symbolic than profit-seeking. Other BTC nodes reorganized the chain by orphaning the block, leading some to deny it had happened, but it existed long enough for $21 to appear from one wallet and appear in another. The most famous BTC reorganization, at least to Bitcoiners, happened in March 2013, right before the word Bitcoin began to enter the mainstream consciousness. An update to the protocol, version 0.8.0, enabled miners to process block sizes that, while valid pre-0.8.0, miners were not able to handle. The first large block caused an unintentional hard fork. The two largest mining pools at the time, Slush and BTC Guild, downgraded to version 0.7, giving the chain without the large transaction block the most hashing power and forcing the other 0.8 using nodes to reorganize. Amid the confusion, one user performed a successful double spend of $9,800 though this was regarded as an experiment rather than a malicious action. This incident is also notable for Gavin Andresen's use of the alert key system to notify miners, which eventually led to the key's removal from the BTC protocol. As of today, BTC still does not have a built-in way to notify miners to make urgent actions to fix an issue. I wonder why that is. Look at that, the use of the alert key, they just took it out. They want BTC to be absolute pieces of crap, which it is. In March 2021, the BCH8, now called eCash, Fisher Price Cash as I know it, network saw reorg attacks that appeared to be performed or at least strongly supported by a group of BCH supporters called voluntarianism.dev. Posts by the group suggest it was a response to the Bitcoin ABC's BCH-A forking from the BCH network in order to implement the infrastructure funding proposal, which is the IFP, which is like the tax they wanted, and the BCH nodes had rejected. These attacks were notable as the attacker reportedly spoofed the Zulu pool mining network, something that also happened in the mid-2021 reorg attack on BSV. One network that has experienced numerous reorg attacks and double spend attempts is the Ethereum Classic. Ethereum Classic is notable as its situation is in some ways similar to BSV. though it has a smaller ecosystem and is less well known than Ethereum. Ethereum Classic is the continuation of the original Ethereum protocol blockchain, which hard forked on July 20th, 2016 as a redress to the infamous DAO hack. Desperate to bail out investors who lost money to an unforeseen by most exploit of code in a project called the DAO, Ethereum developers took the unprecedented step to roll back the blockchain a few days to erase the mishap, an action that selectively nullifies blockchain records to rescue an influential in-group of asset holders should be anathema to blockchain proponents, as it makes a mockery of the technology's fundamental principles. Indeed, it was some, albeit a minority, in the Ethereum Classic and Ethereum continued to use the unmodified Ethereum chain. Ethereum Classic calls itself the original Ethereum, which it is, and needless to say, supporters of the more powerful Ethereum are unhappy with its presence. Yeah, alright. So that was Ethereum. In light of the recent network attacks, it's recommended that all exchanges, mining pools, and other ETC service providers significantly raise confirmation times on all deposits and incoming transactions. I mean, Ethereum is a complete waste of time anyway. Technically, protocol developers rolling back a blockchain itself, a form of reorg attack, though in Ethereum's case an officially sanctioned one by their central planners. Scathing. Though the DAO hack was an unforeseen by its developers exploit of the DAO project code, it technically wasn't against the rules and wasn't performed by a miner or node operator, so it wasn't a reorg attack itself. A chain reorg erased its transactions, albeit controversially. Ethereum Classic has been the target of multiple reorg attacks, and the double spend attempts its existence, possibly due to its lower proof of work and therefore lower cost to attack it. It's also possible to imagine that Ethereum Classic is a target due to its status as the original real Ethereum blockchain, as there's plenty of motive for opponents to want to damage its reputation. Why would they even carry on with it? I don't get it. Or maybe just the attackers wanted to carry on. Another series of at least 15 reorg attacks occurred on Ethereum Classic in January 2019. Coinbase said it identified 12 double spend attempts totaling 219,500 Ethereum Classic, or $1.1 million at the time, and suspended Ethereum Classic deposits and withdrawals until the matter was resolved. I mean, who on earth is using Ethereum Classic anyway? Like, honestly, I mean, who's using any of these shitcoins? It's just hilarious. In the history of Bcrash, there have been several attempts to double spend coins by rebroadcasting the same transaction to both the BCH and BTC networks. In May 2019, Bcrash mining operations such as BTC.com and BTC.top performed reorgs to undo these more obvious attempts at theft. Double spend attempts using reorg attacks are less common on BTC, given the expenditures required. Though double spend attempts do occur, they tend to be for individual transactions, for example, taking advantage of BTC's clogged mempool and high fees, using a design for introduced BTC centrally planned control developer group, which they call replace by fee, to substitute one transaction for another. Notice they say centrally planned protocol, because that's what it is. It's totally centralized and utterly worthless. A successful double spend on BTC would be higher profile and disruptive, such as the $21 double spend mentioned above. It's worth noting, however, that influential BTC personalities did consider the Ethereum-style rollback reorg in May 2019, following a multi-dollar theft from Binance's wallet. As Binance CEO CZ tweeted, they decided against pursuing a rollback. That would have been absolutely ridiculous, but only after considering it and discussing with representatives from the mining sector. I mean, it's you may as well just lengthen the rope for him. It's ridiculous. All this shows that malicious actors are out there looking for any chance they can to exploit vulnerabilities in blockchain networks for a variety of reasons. They are rarely catastrophic given the built-in security measures and even quicker detection methods. Ordinary users do not lose funds from such attacks. However, deliberate attacks against blockchains are still disruptive and can damage reputations, whether they're rectified quickly or not. Again, another very good article there. Loving that one, Mr. John Southurst. Great stuff. So 24 minutes gone already. Let's have a look at some of these articles. These absolutely crack me up. Look. So I looked at through these, starting from the top. Again, it's all to do with, the price has crashed below $30,000. Central bank digital currencies, who cares? Bitcoin price, who cares? Bringing a crypto payments ecosystem around the world. 3 reasons why Bitcoin price has not been able to rally back over $40,000. Honestly, the entire market is speculative. It's so funny when you realise that all these people are going, they're just guessing, is it up or down? Is it up or down? 50% say up, 50% say down, And when it goes up, those 50% are like, yeah. And when it goes down, the other 50% are just like, yeah. It's just so ridiculous. It's just a speculative piece of crap. Like, I do find it funny, it really doesn't take a rocket scientist to figure it out. Like, it's a medium of exchange. That is literally it, So let's see what this one was. Behind the breakup of FXT and Binance. So it sounds like these two have had a spat. They're both billionaires. So Binance's peers are distancing themselves from the company as regulators circle overhead. Oh dear, oh dear. This is hilarious. Again, there's no honour amongst thieves. No siree. Here's something you might have missed amid news this week that cryptocurrency exchange FTX has raised $900 million in the largest ever funding round for a crypto exchange. Why do they need to raise all this money? It's a Ponzi scheme. That's all it is. Binance, an early investor, exited its position. FTX CEO Sam Bankman-Fried and Binance CEO CZ, in multiple separate interviews, both tried to frame the breakup as a routine and unremarkable. But come on. CZ told Forbes the move was part of a normal investment cycle. Bankman-Fried, in an extensive interview with Decrypt's Adriana Hamacher, said, I think it just makes sense given the role that our businesses are playing in the space. It can also give us more flexibility going forward. It's what Bankman-Fried said next when asked for his take on Binance's recent string of regulatory problems that is most telling. It's been quite a barrage. I'm not involved in the conversations between them and the regulators, and so all I can do is speculate. But something I'll say is that we try really hard to be as cooperative as we can with regulators. I think that when you don't do that, and when you sort of appear as less flexible to be responsive, I think that's more likely to lead to cases where regulators might feel like they have no choice but to start bringing the hammer. Ooh, dear oh dear, yeah, subtle as a sledgehammer. Later he added, I think there are some differences between how we run our business. Yeah, wanting to definitely separate from Binance there. I think there are ways I would have responded and run things differently. Bankman-Fried is being careful not to say he bought out Binance's shares in order to distance his company from Binance, so I'll do it for him. That's obviously the reason. Binance has been under fire from multiple regulators in recent weeks, including the UK, Italy, Japan and the Cayman Islands. As a result, the multiple banks and payment processors cut off customer transfers to Binance. Dear oh dear. Rival crypto exchanges now see an opportunity, in contrast to play nice, or at least looking like they want to play nice, with regulators. As a Business Weekly story framed it earlier this month, Coinbase, Kraken and Gemini have a plan to beat Binance, play by the rules. Rub it in. And that was even before FTX bought out Binance's shares. The FT reports that hedge funds are also backing away from Binance. Oh dear, oh dear. To be fair, Binance, like every other exchange, says it has no issue with regulators. Yeah, right. Everyone thinks that Binance doesn't want to comply with US regulators or any regulations. CZ told me in May. But that's totally off. Binance is actually the most compliant organization in the world. I think the crypto space. Don't laugh. It's just such a lie. It's ridiculous. Binance clearly made a killing on its FTX investment. Neither side is disclosing financials, but Bankman-Fried says obviously they did quite well. And CZ told Forbes, we've seen tremendous growth from them. We're very happy with that. FTX launched barely 2 years ago and already boasts an $18 billion valuation. Now FTX and Binance increasingly compete with each other. They're likely to start looking more like frenemies than friends. On the other hand, Coinbase Ventures invested the $900 million round. As the space grows and all the big exchanges seek to attract customers while also navigating the necessarily evil of regulation, you get the sense that other exchanges are all in this together, while Binance increasingly stands alone and an island unto itself. This is Robert Crypto, a weekly column from Crypto Edition in Chief, Daniel Roberts, and Decrypt Executive Editor, John Roberts. Yeah, blah, 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 blah. All right, well, I mean, again, all these exchanges, they might be worth billions now, or like 18 billion for FTX, but they're all full of illegal securities. All of them are absolute pieces of crap. They are going to come crashing down, not going to cover their overheads. All these people have got pretty much all of their wealth tied up in crypto. It's really not going to be good for them. Dear, oh dear. And again, it's just common sense. A little bit of research is all you need, to figure it out. It's really not hard. It's really not hard. And let's have a quick look at this. Goldman Sachs survey shows family offices are flocking to crypto investments. Again, because they don't have a clue what they're doing. High net worth families are turning to cryptocurrency investments, according to a recent Goldman Sachs survey that found close to half of the company's family office clients are inquisitive about crypto assets investments. A Goldman Sachs executive further said that a large portion of the company's family office clients are asking about blockchain and cryptocurrency technologies. Yeah, they would be, because nobody knows. So there's, we'll just go to these experts. Little do they know, these experts don't have an effing clue. Literally not an effing clue. It is crazy when you think about it. Initially they were poo-pooing Bitcoin. And now there's, we're going to open exchanges and listen to us. You should buy it because we get commission now. They have no clue. Literally no clue. Following the SPAC boom, family offices target crypto investments. A recent report from Bloomberg suggests that the ultra-rich families of the world are interested in blockchain and crypto asset investing. Again, because they want to know about it and nobody knows. The report stems from the New York-based multinational investment bank and financial services company Goldman Sachs, which conducted a study that polled over 150 family offices. The findings suggested that high net worth families are turning to crypto because of higher inflation, prolonged low rates, and other macroeconomic developments following a year of unprecedented global monetary and fiscal stimulus. A private wealth management executive for Goldman, Mina Flynn, told Bloomberg that a lion's share of the families want to discuss blockchain and digital ledger technology. And alongside this, that family office believe this technology is going to be as impactful as the internet has been for an efficiency and productive perspective. Out of the polled respondents who think the macroeconomic developments and higher inflation is an issue, 45% are inquisitive about crypto assets to hedge against these problems. Absolutely. It's all coming. It's all coming. And it's all coming to Bitcoin, which is BSV, the whole lot. Just wow. Crypto industry sees an uptick in family office participation. According to Goldman, 22% of the family offices that responded managed $5 billion, while asset managers with $1 billion to $4.9 billion represented 45% of the polled participants. Furthermore, the Goldman survey found that out of a polled 15% of respondents have already invested in cryptocurrency and blockchain products. Oh dear, they're all going to lose. They're not going to be happy. People are going to have to pay. While some are curious about investing in cryptocurrencies, Goldman's survey also noted that some respondents have concerns. One of the biggest concerns being whether or not crypto assets have long-term staying power. Goldman's survey also noted that while many of the investors are investing in real estate and equities, a great proportion of these family offices are participating in special purpose acquisitions, company investments, otherwise known as SPACs. Family offices were also interested in cryptocurrency investments during the bull run of 2017 as well. This year, Fidelity Investments, which is a huge investment fund, investments crypto subsidy Fidelity Digital Assets has seen an uptick in family office participation. Tom Jessup, president of Fidelity Digital Assets, recently explained the company noticed institutional investors and high net worth offices have accelerated demand for Ethereum. Oh dear, that's hilarious. Accelerated demand for Ethereum. Honestly, sheeple, absolutely hilarious. Right, peeps, shout out to Snoozefest, KP Dad, and Reform Too Many Coiner in the house. Let's do this. It's time for one of my favourite parts of the day. It is dinging of the dawn. Just open up my hand cache here. Here we go. Sending. The first one is to a Mad Dame. There we go. Got it. Swiping to send. On the way to you. There we go, turning up the volume. KP Dad 72 on the way to you. Here we go. KP Dad swiping to send on the way. And Reform 2 minute coin, I do believe that is use it or lose it. Here we go. So, yeah, alright. Use it or lose it. Got it. There we go. Swiping to send on the way to Yao. Excellent. There we go. Alright, people. Rock and roll. Hope you enjoy the show. As ever, be aware. Take care. Stay safe out there. Joy given. Let's do it all again tomorrow. Catch you guys later. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.